Welcome to the first inaugural episode of Everything You Wanted to Know. My name is Jan Ginden. I'm a certified public accountant, certified valuation analyst, financial modeling and valuation analyst, and a co-founder of boutique advisory valuation practice. And today, with us, we have Yigal Reichman.
Thank you very much, Jan. I'm excited to be here at the first episode of Everything You Wanted to Know. It's a series focused on business valuation. I'm the managing partner at Reichman Consulting, and I'm looking forward to speak to you today about valuation.
Thank you, Yigal. Today, let's talk about business valuation reports that are issued as an outcome of a valuation engagement that we typically perform using one of the three approaches: income, asset, or market approach, and any of the accompanying methodologies. But not all reports are created equal, isn't that so?
Yeah, that's exactly right, Jan. We have in the valuation paradigm three types of valuation. We have two opinion types report. The detail report provides all the details of the valuation effort. It is often used in IRS and estate matters. The second opinion report is known as a summary report. This is a report that also renders an opinion, but is described in a summary form. And finally, we have valuation calculation, which is presented in a calculation report. And this has no opinion and usually uses only one of the methods that are acceptable in the valuation arena: the income approach, the market approach, or the asset approach. We often see the valuation calculation report as income approach, but we've seen them all. That's up to the client and depends on the circumstances.
I see. So, what drives the selection of the type of report issued?
That's an excellent question, Jan. What drives it is the client's need. For example, if we are talking about due diligence or buy-sell situation or sometimes even matrimonial, the calculation report is really the cheapest and most direct way to get to an answer. It's without an opinion, and we often see it used in the income approach by creating what's known as a representative year, and that's how we often see it. The opinion report, the detailed and the summary report, will use all three. Will consider all three methods, where the income approach will try to achieve again as a representative year what is the typical year of the business. The asset approach often arrives at the lowest value because of the circumstances that this approach is using, and it's often required by operating agreement. We see this in operating agreement in LLCs and corporations that require an asset approach for valuation purposes. The market approach is what people refer to as a comparables, and we need to be careful on that with the comparables because it's hard to find exact comparisons. So adjustments have to be made if we see comparables in the market approach.
I see. So, let me just underline that if we are expressing a conclusion of value, typically we issue a summary or a detailed report. And if we are performing a calculation of value, then we issue a calculation report. Are there abridged or oral reports that can be issued in conjunction with the valuation engagement?
Yes, there are abridged report that you can provide in an oral report. They're the same reports that you just discussed now. And what I would stay away from is quick and dirty, quick and cheap, back of the envelope calculations. These are the type of calculations that don't work in the long run. So we can use oral reports to convey the activity that happened in either the summary report, the detail report, or even in a calculation report.
I see. I see. So the content of the reports, the layout of the reports is pretty much driven by the standards. Are there any exemption to these standards? What about a litigation engagement or a litigation report? How are these addressed?
Well, the standard gives leeway to the valuation analyst, the person preparing the report, when it comes to a litigation setting. Under that situation, the valuation analyst is exempt from some of the standards. A good practice will be not to take that exemption and to continue to comply with the standards, regardless of the settings in which it was provided. So that's what we do at our firm here.
I see, I see. I do want to add that in addition to litigation engagement, we are also often engaged in the business valuation review, whereby we review a report of another expert and express an opinion on that report. Now, if we are performing the business review separate as a standalone from a conclusion of value, and all that we are expressing whether the expert has provided sufficient justification in the approaches and methodologies, then the reporting requirements do not necessarily apply. And that report can be issued in any structure, in any manner, so long as we are clearly able to convey our review and critique of the opposing expert. Is that correct?
Yeah, that's an excellent point, Jan. The rebuttal reports, we sometimes get engaged to do one or two things. Sometimes to rebut the other side's expert. We also help attorneys in cross-examination of doing that kind of work. And sometimes it's to provide a competing expert report with different assumptions or different analysis. The latter is rarer because then you have two experts providing two different opinions, and that often confuses the court. But the rebuttal report is more common because we go after what the opposing valuation analyst performed, and we critique it. We think critique is warranted.
I see. So, in this case, who do we prepare the report for? Do we prepare the report for an attorney who's engaged us? Do we prepare the report for the judge, or what?
It's a good question, Jan. We prepared for the decision maker. So if this is an insurance situation, we prepared for the insurance company. If this is a judge and jury or finder of fact circumstances where it goes to the court, we prepared for the court. Sometimes we're prepared for, let's say, matrimonial settings where the couple are getting divorced, would like to just know what the value is in order to negotiate among themselves how they're going to proceed with their matrimonial separation. So it really depends on who the decision maker is, and we have to face our rebuttal report towards that decision maker's perspective, expected knowledge, and also the sensitivity that that decision maker will have. Funny enough, the judges and the jury are the most sensitive ones, where sometimes if we see collaborative divorce, they are less sensitive. They simply want to know what the value is so they can do a buy-sell agreement between the parties. Sometimes they're co-owners. And so we help them decide that. These are the typical settings we see rebuttal report.
I see, I see. Well, thank you very much for giving us this in-depth view into the type of reports normally issued in conjunction with the business valuation or litigation engagement. Thank you for joining us, and we look forward to future episodes with Digal focused on everything you wanted to know.
Thank you very much, Jan.